Stocks closed mixed on Wall Street. The Dow gains while the Nasdaq and S&P 500 correct as the job market shows signs of cooling. Markets in the Asia Pacific trade largely lower on weak cues from the US. The SGX Nifty 2 is signaling a lower start for the Indian market. Gold rallies to 52-week highs as fears of an impending slowdown in the US market triggers a rush to safety. Crude trades flat as investors weigh output cuts and chances of an economic slowdown. It's policy day. 90% of market participants polled by CNBC-TV18 expect a 25 basis point hike, with only 10% expecting a status quo. Everyone polled believes this will be the last rate hike of the cycle. The Union Cabinet will meet this evening to take up the Kirit Parikh's panel recommendations on gas pricing. The panel has proposed $4 per unit of natural gas as the base price and $6.50 as the ceiling. With asset monetization worth 76,000 crore rupee, government has hit 53% of its full-year target as of January, tells the Finance Ministry to Parliament. The centre has set a target of 1.6 lakh crore rupees for FY23. Good morning in the Mumbai News Centre. I'm Sonal Bhutra and you're watching Power Breakfast. Last trading session of this week. It's a Thursday morning and we have a lot of important cues to talk about, the biggest one being the RBI monetary policy. But before we discuss what to expect and what are the cues for our own markets, let's take a look at what the Asian markets are doing. Well, the US markets, they closed mixed. And after that, if we look at the Asian markets, they are largely lower in trade today. We have the Taiwanese index, which is down 0.6% right now. That's a 100-point cut, almost there. Hang Seng is down 30 points. The biggest cut there is coming on Nikkei, which is down around 1% right now. We also have the Kospi is sitting with cuts of 0.5%. Shanghai too is lower in trade today. As a result of all of this, we are looking at the SGX Nifty, and that is indicating that the start for our own markets could well be in the red. It has recovered from the lows, but still is indicating a cut of around 30-odd points. So that is the move that we could see in our own markets today at that 17,595 mark right now. Let's talk about the US markets. Wall Street ended yesterday's session mixed. The Dow Jones closed with 0.2% gain. The S&P 500 fell by 0.25%. And the tech-heavy Nasdaq also was the day's underperformer, shedding about 130 points. CNBC's Steve Kovac gets us a wrap of all the action on Wall Street.
Markets closing mixed today as investors react to weaker than expected economic data. The Dow closed slightly higher, bolstered by shares of United Health. The S&P ended in negative territory, finishing down 0.25%. And the Nasdaq finished lower, dropping over 1% as investors shift away from tech stocks. Private sector hiring rose by just 145,000 during the month of March, according to the latest report from ADP. That number is down from last month and is well below what Wall Street was expecting. It's the latest signal that U.S. economic growth could be heading for a slowdown. Meanwhile, Johnson & Johnson is offering to pay close to $9 billion to settle claims that its talc-based baby powder caused cancer. If approved, the settlement would end litigation with tens of thousands of claimants represented in lawsuits against the company. Though the move has not yet been approved, shares of J&J finishing the day up better than 4%. That's what's happening here in the U.S. Back to you in Mumbai.
Okay, all right. That's about the U.S. markets. But let's stay with the U.S. markets. Let's listen into some views coming in from Kristen Bitterly of Citi Global Wealth and Ruchi Sharma on the likely bear market rally in the dollar.
I go back to this concept of the Fed, and what the Fed is looking at is actually lagging indicators. Their benchmarks are around inflation and employment, and those are lagging. When you look at the leading indicators and all of the data that we received this week, whether it was manufacturing, services, jolts, even what OPEC did in terms of you could make an argument that that's really trying to forecast demand destruction. You have to actually pay attention to some of those signs and the ones that are telling you where the economy is going. If the Fed is cutting, right, that means that's different than a pause. If the Fed then pivots and cuts, it means that we've seen a deterioration in employment. We've seen a deterioration in this economic activity, which has to have some downward pressure on earnings and on equity markets.
The dollar's had a very extended bull market over the last decade, where its valuation reached levels that we saw pretty much close to the peak of the past dollar bull markets. The dollar is going to be in a multi-year bear market because the valuations got very extreme. the US is still very reliant on foreign funding. The US current account deficit is close to 4% of GDP, the largest that any major developed country is running out there. And I think there is a real desire by foreign investors, especially central banks, to diversify outside of the US dollar. So I think these are some of the cyclical reasons why I think that the dollar is set to decline over the next few years.
Okay, that's an important story. Of course, we'll keep analyzing the dollar moves for you as well. But it's time for the final update on our global market wrap. This morning, European markets ended Wednesday's trading session mixed, with the French CAC down about 29 points, the German DAX slipping 83 points, and the British FTSE closing about 28 points higher. Speaking on Credit Suisse's takeover, the chairman of UBS said the merger presents a new beginning and huge opportunities ahead for the combined bank and the Swiss financial sector as a whole. In a separate statement, Swiss regulator FINMA said allowing the bankruptcy of Credit Suisse would have crippled Switzerland's economy and likely resulted in deposit runs at other banks as well. Okay, that's all about the global market action. Of course, these will have an impact on our own markets as well. We have big cues coming up in our domestic markets. So let's get in our research team joining in bright and early to tell us what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. First up, Vivek, let me come across to you. What is the market setup looking like today?
Well, good morning. At least this particular week, it appears as though the underperformance that we've seen in our own markets versus the rest of the globe and emerging, Asian markets seems to have ended at least for this particular week. So, hopefully that particular trend can continue. Talking about the Qs, overnight Qs have been quite subdued. US markets, like you mentioned, most of them have ended slightly lower. European markets too, very similar handover given over there. Most of the European markets too ending marginally lower. Good part is crude oil prices also stayed quite flat overnight, despite the negative news flow that has come in as far as crude prices are concerned. So Brent futures now trading closer to the $85 a barrel mark, while WTI futures are close to $80.6 a barrel mark. Now coming closer to the Indian markets, for the first time in 2023, you saw gains for 4 straight sessions, and mainly these particular gains were aided as far as the benchmark indices were concerned by the HDFC Twins and also select banks from the mid-cap as well as the large-cap space. Now, also, after a while, you saw L&T leading the pack, a strong rally yesterday after the order win. So, good start as far as FY24 is concerned, even for the cap good space. Now, today, of course, the RBI MPC meet outcome, the trajectory there, the commentary there will be very keen, and especially how financials and rate sensitives perform, post that particular meet will be very important to watch out for. Also, select, consumer companies have come out with their quarterly updates, especially DMart. So that too will be very important to keep track of. Asian markets subdued, SGX indicating a mild gap down for our own markets.
Okay, all right. There's some recovery in Hang Seng though. Thank you so much, Vivek, for joining us with all those cues. Let's talk about some stocks that will be in focus as well. Surbhi is joining us with that list. Surbhi.
Hi, good morning. Thanks for that. So we continue to track the Q4 business updates that keep pouring in. The first one is coming from Equita Small Finance Bank, where their gross advances were up 36% on a year-on-year basis, and the disbursements that were up 80% on a year-on-year basis. Next is Cholamandalam Investment and Finance, where the disbursements were up 65% on a year-on-year basis, and the collection efficiency came in at 130%. Ujjivan Small Finance Bank, their total deposits grew 39% and crossed 25,000 crores, and the CASA showed a growth of 35% on a year-on-year basis. Next is Avenue Supermarts. They reported a standalone revenue of 10,337 crores for the quarter, and the total number of stores opened in this quarter were 324. Tata Steel, their India production volume was up 5.1% at 5.15 million tons, and the delivery volume was up 0.6%. And lastly, Nykaa, they reported their Q4 business update, and they say that the BPC segment sees a higher growth on a year-on-year basis in Q4, and at consolidated level, they expect to sustain the growth rate which was they reported in 9-month FY23 period.
Okay, all right. Thank you so much for that, Surbhi. Finally, let me go across to Nigel, joining in with all the cues from the F&O space. Hey, Nigel, good morning.
Well, morning, Sonal. And yesterday, in fact, we had a very, very good trading session. The Nifty did very, very well, and the large cap names did particularly well. Now, in terms of a data point that's coming from the F&O market, there was short covering both on the Nifty as well as the Nifty Bank. And on the market on the whole, it appeared that the Nifty Bank did see a bigger short covering bounce. But that wasn't the case from the FIs. Because, yes, the FIs covered shorts. They covered close to 25,000 contracts on the short side. They added close to 6,000 contracts on the long side. But if you look at it more closely, the short covering that we saw from the FIs in particular was on the Nifty, not on the Nifty Bank. On the options side, well, they bought both puts as well as calls yesterday. They bought a little bit more puts than calls. But what's encouraging to see is that they were writing puts yet again. And yesterday, they wrote close to around 2 lakh put contracts. Where was the writing? Well, it came in at the Nifty as well as the Nifty Bank, and the PCR now has moved up to around 1.4 in comparison to 1.15. Remember, we're moving towards the higher end of the band. The band has been around 0.7 to around 1.5 odd, so we're nearly at the higher end of the band. What was getting written yesterday? 17,500, 17,400 put, which brings us to the levels. Support zone is at around 17,450. You have the 200 DMA is bang in line at around that 1,700, 500 odd. So 17,450 to 17,500, you like to defend that mark. On the Nifty Bank, the 41,000 put, well, that was very, very active. The premium ended at around 155, but at the start of the day, it was close to around 250. So you deduct 250 from around 41,000 odd, you get your crucial support zone on the Nifty Bank itself, which is around that 50 DMA out there. And on the upside, the 100 DMA, that's a crucial mark. SGX Nifty is indicating a pullback, but the Nifty Bank yesterday was an underperformer. Today, the Nifty Bank will take center stage. Back to you.
Of course, it will. Thank you so much, Nigel, Surbhi and Vivek for joining us and prepping us up for this crucial trading day ahead. Time for a short break now. When we return, it is RBI Policy Day. We'll tell you what to expect from the Reserve Bank after this very short break, so stay tuned for that. Welcome back. Still tuned into Power Breakfast on CNBC-TV18. Well, the big event is here. The monetary policy announcement is only about a couple of hours away. Our poll showed majority in the market expect a hike. Let's get in Lata Venkatesh with her editor's take. Lata.
Well, that is the base case, that the Reserve Bank is more likely to hike than not hike. But I must add that this one can go either ways. You can as much justify a hike as you can justify a pause. So chances are, if they do hike, what people say, they call it a dovish hike. That is, they will indicate that they could pause for some time and become data dependent. So they'll change the stance from withdrawal of accommodation, because accommodation has already been withdrawn. In case they pause, which is a slightly less likely scenario, then they will say that they are not done, but they are pausing because they want to wait and see how the steps so far have impacted. That's what people are positioned about, a dovish hike or a hawkish pause. Now, the chances are that, the market is worried, or the Reserve Bank could be worried that there could be another banking crisis. Growth in the US could fall off a cliff. That will call for, some kind of a pause right now. There is a school of thought that believes in that as well. The other thing that the market will watch out for, what is their inflation number? It stands at 5.3 for next year, and the last quarter of next year is 5.6. But the fourth quarter, that is the quarter that just ended for FY22, FY23, you suddenly saw a spike in inflation. So will that base effect bring down the fourth quarter inflation of next year? So inflation trajectory will be very important to guess the future moves of Reserve Bank. That is the other thing that we would watch. And of course, any statement they say on liquidity, because the market is worried later on in the year, such a massive borrowing program will require some help from RBI. That's the other thing that people will watch out for. But just let me tell you, if there is a pause, there is Diwali in the stock markets. If there is a hike, they will be able to take it in their stride. Bond markets, if there is a pause, there is a genuine rally, because they are placed, they are positioned for a hike.
Okay, Lata, thank you so much for joining us with that take. Very important and comprehensive as well. Of course, you can catch all the action on CNBC TV18 with regards to the RBI monetary policy in next 2 hours, 13 minutes as well. We'll move on with that. The government has achieved just over 50% of its asset monetization target for FY23. The Finance Ministry told Parliament it has managed to monetize assets worth 76,000 crore rupees as of January this year. Sapna Das is here with more.
Well, this is official data, and this is something that the Finance Ministry has shared with the Rajya Sabha. These are official asset monetization numbers. So against the aim of 1.62 lakh crore kept for FY23, end of Jan assets worth 76,000 crores had been monetized, so to speak. So that's around 53% of the aim. Now, we really don't have data for Feb and March, but I suppose it could be safe to assume that maybe the 1.62 lakh crore or target that the government had kept in mind for asset monetization in FY23 has gone unmet. This would be contrary to the previous financial year, that is FY22. They had actually exceeded the asset monetization aim by a small margin. However, from the last financial year onwards, probably the pace has kind of slowed down, though the government is very clear that they have been holding periodic review meetings, and various ministries have tried to expedite the rollout of these transactions in the previous year. Railways is the big one under asset monetization, followed by a lot of other ministries. Of course, roads and highways are also very important. But looking at the current trend, maybe, the 6 lakh crore number, which the government had planned as asset monetization target by FY25, that I think could be a bit of a pie in the sky. It could be slightly difficult for the government to meet that, looking at the way the data is moving at the moment.
Sapna, thank you so much for joining us with all those details. So that's all about the macros as well. But for now, we'll slip into a break. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. Still tuned into Power Breakfast on CNBC-TV18. It's time to talk all about commodities now. Manisha Gupta is joining us with the update from that space. Hey, Manisha, good morning.
Thank you for that. Well, I'll start with the crude oil prices, where we have seen prices slipping below $85 a barrel. Having said that, we still are trading in the positive. The decline comes in after the U.S. service sector slows more than expected in the month of March. We've also seen the U.S. manufacturing numbers slow in the lowest 3 years for the month of March as well. So all the data that's come in for March from the U.S. markets, whether it's manufacturing, factory activity or services, all of that has weakened, and that's weighing on to the markets. In the meanwhile, the prices will continue to see support because Saudi Arabia, for a third straight month, has lifted prices for Asia. What's also not doing well is the metal prices. Well, they have also declined on weak demand concerns because the data from US and China also has come in weaker. So zinc is trading at a 5-month lows. You have copper prices trading at a 2-week lows. Steel prices are trading at a 2-month lows. Iron ore prices are trading at a 3-month lows as well. So nothing in metals that is putting a positive day today or for the week as well. We're trading in the negative for the month of April until now.
Okay, all right. That's about base metals. Thank you, Manisha, for joining us and telling us what's happening in the commodity markets. With that, let's move on to some important global news now. French President Emmanuel Macron and the European Commission President landed in Beijing in a rare 3-day visit to China. He's accompanied by a business delegation of over 50 French CEOs. However, the war in Ukraine continues to dominate the agenda. The two European leaders are due to meet Chinese President Xi Jinping today. This trip follows the ones made by the German Chancellor and the Spanish Prime Minister in recent months. Macron last visited China in 2019 before the COVID-19 pandemic. Moving on to some more important global updates, the Taiwanese president met with U.S. House Speaker Kevin McCarthy on Wednesday in what was a highly anticipated event defying threats from China. The landmark meeting is the second time Tsai has met with an American lawmaker of that rank within a year. China responded promptly with a statement saying it firmly opposes and condemns the meeting. Beijing also urged the U.S. to stop containing China by exploiting the Taiwan issue and not further go down the wrong and dangerous path. All right, with that, we'll take your leave on this edition of Power Breakfast with the news that the SGX Nifty is indicating that the start for our own markets could be in the red. Asian markets are under pressure right now, but we have a lot to talk about for our own markets as well. So we'll take your leave, but do stay tuned. Bazaar Morning Call comes up next.